We always have this problem when we talk about China as an investment. You can get a pure China fund like Arnie's runs, ASHR, exposure to mainland China, or you can get exposure in various international funds like Vanguard Growth. Yeah, I know you're a big proponent of that fund, but the exposure really varies tremendously. I guess what's the right level of exposure? I look at some of these iShares emerging markets, it's 35% China. Vanguard International Growth, which you've been talking about, 14% weighted towards China. Vanguard Total International, the whole world, ex-US, is 10%. And on the iShares ACWI, All World Index, it's only 5%. So you can go all over the place on this, and this is the problem we have when we ever address this China issue.
Well, the question is, are you going to make a bet in your portfolio on a China allocation? You know, are you going to bet on 14? Are you going to bet on 5? Are you going to bet on 20, on 30? Or are you going to let someone who's got boots on the ground make that determination for you? I mean, the world is a big place. China is obviously a big market, and, you know, really glad to have some exposure there, but I'm glad to have exposure there through some very, very smart managers. The guys at Bailey Gifford it's really a terrific team. And they, you know, they are running the bulk of the International Growth Fund, and they have a couple funds of their own.
Yeah. Arnie, tell us a little bit more about ASHR, the fund you guys are running, and what's in it. I know it's heavily weighted towards banks and insurance, but give us a sort of flavor about what you're owning when you buy that.
Yes, with pleasure, Bob. And I would agree with the previous speaker that it's actually very important to have a close eye on the China allocation. Also, when we speak about Chinese equities, it's very important to understand what type of Chinese equities. So, for example, ASHR is the largest ETF outside of China that provides exposure to domestic Chinese equity in the form of the CSI 300 index, which essentially represents the 300 largest companies in China. And just for argument's sake, the previously mentioned company Evergrande is not part of that index, so ASHR does not have any exposure to that particular company. Also, what I would say is when you look at the different China ETFs that exist here in the US, but essentially all over the world, really do have a look at what are the underlying companies, what are the underlying indices and resulting sector exposures that you take into account. So as you already outlined, Bob, ASHR is heavily weighted towards financials, IT, and consumer staples. The bottom sectors, in fact, of ASHR are energy, communications, and, of course, real estate. So it is very, very relevant, especially when we look at the real estate segment, then against the biggest competitor ETFs here in the US. ASHR has an underweight of roughly 2%. So the sector deviation can really matter here.
Yeah, so I guess, Arnie, I know this is a tough one to answer, but this is the question I keep getting from the viewers, is China really investable right now? How should investors look at exposure to China, given all these regulatory risks that have appeared that look much higher than expected?
Yes, from our perspective, China is very much investable. However, we would definitely caution that, you know, China should not be looked at as a market like the US or let's say most of Western Europe. China, obviously, as an economy, is subject to much more stringent and severe regulation. The regulatory risk on individual sectors and individual companies is significantly heightened. So what we would on our side say, you as an investor, for all of our investment partners out there, China is most definitely too large and too important for the world economy to be ignored. However, the current circumstances warrant and very much show us that it's a good time to have another look at what drives China and what drives the different China allocations that may, as you point out, Bob, already be in existence through various other vehicles.
Yeah, you know, I want to just emphasize for everybody that even with a pure China fund, there is a lot of ways that you can slice and dice China ownership, because there's three markets, essentially. You're dealing with mainland China, you're dealing with Hong Kong, and then you have U.S.-listed China shares like Alibaba. And you can see we put up some of these earlier in a full screen. You know, the ASHR tracks the 300 largest China mainland shares, but you've got a large cap fund like FXI, iShares, that's 50 Hong Kong listed stocks that behave a little differently. MSCI China is sort of an amalgam of Hong Kong as well as China and mainland, as well as U.S. stocks. That's probably the broadest of them, but you can get others too. Crane Shares has the China Internet, KWEB, which is China Internet that includes U.S. listed shares as well. So you can slice and dice this a lot of ways, Dan, and if you actually put up China versus the U.S. markets this year, the S&P 500 is up 16%. But, the rest of it, look here, it's all over the place. KWEB is down 39%, and Arnie, your X-Trackers is down about 8%. So there's a lot of different ways that you can play this, Dan. No matter how you slice
Bob,
it, though,
I think
China's been a dramatic
Arnie's
underperformer, Dan. I guess that's what I'm getting across here.
Yeah, Arnie is exactly right. You have to look at the underlying. If you're going to do ETFs, you got to look at the underlying index because they are all across the map, and that's why, I think he kind of makes the point for me that an active manager can pick and choose and build a portfolio based on their research as opposed to, the whoever it is that constructs these various indexes. So, that is why we've been advising our clients forever to use active funds. If you want to make a weighted bet on one country, whether it's China, France, Italy, Turkey was very popular last year. You can do it with ETFs, but you have to be very, very cautious. It's really a trading vehicle. It is not an investment vehicle.